Hello traders, what's going on guys? Hope you all are doing great. Hope you all are doing very much amazing. I welcome you guys to this section of the video on key level. This is going to be very powerful, and whatever you're going to learn in this video, trust me, you have not actually come across it anywhere in the trading industry. These are purely based on experience. Okay, so we'll be talking about key level, and I'm going to go straight to the point without any fluff. I'm going to go straight to the point and define the only key level that I trade in the market, and that is the daily key level. The only key level I trade in the market is the daily key level, and by that I mean the daily key level of order block. Okay, so what is actually a valid order block? A valid order block is appears in the market where we have a valid order block must have a fair value gap before or after it. A valid order block must have a fair value gap before it or after it. Okay, good. So let's assume that this is price, this is candle which represent price, and right here this guy opened up here, okay, push all the way up and then close here, okay, and this guy opened up here, was not able to move to this point and then closed. This is the high, okay, and then this is the low. Okay, so a valid order block must have a fair value gap before it or after it. Now this is the fair value gap, this is the fair value gap. Okay, from this point to this point is the fair value gap. Okay, that is the fair value gap, right? Good. So now since this group of candle has a fair value gap between it, that means that this guy here is the valid order block. Okay, now there could be other candles price action inside of this order block, inside of that order block candle. Let me explain what I mean by that. Okay, now there could be candles inside here. Okay, now provided that those candles was not able to close above this high or take out the low, they are irrelevant. They are irrelevant. Okay, the only candle we consider is the one that breaks structure. Okay, that is the one we consider. So every other candle inside of this order block candle, they are irrelevant. They don't contribute to the price action at that point in time. So this is what we look at for in the daily time frame. Okay, so in the daily time frame we look at for key level of order block. Okay, so we look at for key level of order block, right? So this is what we look at for a key level of order block. So now let us look at the philosophy or the phenomena that is behind all of this. Okay, the logic, right, that is behind all of this. Now market structure is, let's see, this is a zone and this is a zone. Okay, now let's define market structure in this zone. Now we all know and we can comfortably agree that if price wants to move from this point to this point, it doesn't just move in a straight line. Okay, price cannot just move straight up to this point. It has never happened. There could be aggressive moves, fine and good and fine, but it doesn't just move this way. It moves in zigzag form, right? So now that movement is what we talk about market structure. So for price to move from this point to that point, it utilizes market structure, higher high, higher low, higher high, higher low, to get to that point. Now what is price doing? What actually changes the entire trajectory in the price, in price on the market? What changes the entire direction in the market? What happens? It is the higher time frame key level. That is the only point in price action that has the potential to change the entire direction of the market is the higher time frame key level. That is why you see that price will trade into a key level and then all of a sudden the entire direction of the market changes. Now let's use example to explain what I'm talking about. Okay, let's look at this guy right here. I'm going to use paper stone market action. Okay, now let me clean everything. Good. Now this is a valid key level. Okay, price came from this high. I'm on the daily time frame. I told you guys that the only key level I use is the daily time frame key level of order block. Now price moved from that high to this point. Now at this point, where is the valid key level? Right here. Where is the valid key level? Okay, let me just increase this. Okay, sometimes price could be these things could be messy, but then see what happened here. Took out the high, did not take out the high. Okay, and this guy took out the high and this one took out the low, right? Good. So if you're looking at the key level right here, you mark from this low to this high. That is the order block. This low, let me explain what I mean. This low point here and this high makes up one candle. From this point to this point is one candle. Okay, so you mark it out this way, and from here, from this point to this point is the fair value gap. So this qualifies to be what? A key level of order block, right? Now the market has been selling for a very long time, since Friday, April 2025 to May 29th, to the end of May 2025. Price was clearly bearish on this leg. It was clearly bearish on this leg. Now, you and me will agree that the only thing that was able to change the entire direction of this market was when price came in contact with what? Higher time frame, what? Key level. That was what changed the entire direction of this market. And it was fully mitigated. That was what changed the entire direction of the market. Okay, so we can comfortably agree that this is what happened. And then there is another key level here below here. From this low to this high is another key level. Okay, you mark them out. So you mark out all your higher time frame words, key levels, and then expect price to do what? To come there to give us reaction. Now I don't want to make this video to be so long, so in another video I'm going to talk about what makes a structure valid. Okay, what reactions can we see when price makes contact with the higher time frame key level? We know that okay, price is ready to do what? To move in the other direction. What reactions, what confirmations do we need to see? I'm going to do that in another video. This video is all about key level, specifically a daily key level, right? So you mark out all your key levels. You can even zoom in to do that clearly. Okay, you mark out your key levels of what? Order block is a key level, and then you have a fair value gap right there. Then you mark out all the key levels, right? Good. Now sometimes it could be mitigated, sometimes it could not be. Like for instance, this is also a higher time frame key level of what? Order block. Can see, beautiful. So you mark them out and you can see that when price came here, what happened? There was a reaction, right? And then we had a sell-off. And then what happened when price pushed up? Another what? Key level of what? Order block. And then what happened there? And then what happened there? We had what? A sell-off. We'll have a buy-off, we'll have a sell-off. Then what happened here? Higher time frame what? Key level of what? Order block. Fair value gap before it, right? And then we have what? A sell-off. So you mark out your higher time frame key levels of what? Order block, right? And then you expect price to get there and then give us reaction. And give us what? Reaction. Now, like I said before, the market structure is that movement, is that particular movement that price is making in when it's trading into a higher time frame key level or trading out of a higher time frame key level. That pattern is the market structure. Now, when price was coming to mitigate this higher time frame key level of order block from this high, I'm rounding up right now, from this high, what is that particular pattern that price was following? It was making what? Lower low and lower highs. Lower low, lower highs. Lower low, lower highs. Lower low, lower highs. Lower low, lower highs. Until it did what? It came in contact with what? This higher time frame what? Key level of what? Order block. And then what happened? Lower high also, right? Now it's making what? Another lower low. Now, something happens, it does not continue like this, because there could be on another key level of what order block that price could be interested to also get to. There's another key level of order block also. Let me just zoom in very well for us to see that. Okay, this has been mitigated. Good. Okay, next one we have is this one, which is still not mitigated. So this is another key level of what order block. So what do? We also do what? We mark it out, right? We mark it out in this one. Now there could be another key level that price could be interested in. We don't really know, we don't care, right? So now we could have market structure shift, chalk and rest of them. Now these points, if price takes out this high, this low, then we can say that we have what the entire direction of the markets has changed. Now we don't even have business, like I don't know how to put it now. Our concentration should be on the key levels, not on the pattern that the price is following, because the key level determines the pattern, the market will follow. The key level determines the pattern. Look at what happened here. It was the key level that determined the pattern that market started following. It started being bullish, break structure to the upside. It was the key level. So key level, this particular key level you are seeing here, can even have the potential to do what? To cause another what? Market structure shift to the upside. This key level you are seeing here can even have the potential to do what? To cause a break of structure to the what? To the downside. So our concentration should be on the key level and validating it. So in the next video, I'm going to talk about key level validation, how to validate key level. So you pick up any pair, and then you do what? You mark out your key levels of what? Order block. So I think with this little video, you'll be able to understand the importance of marking out key levels of what? Order block. For instance, look at this guy also. When this guy came here, a large wick on the higher time frame is an order block on the lower time frame, but then it is a valid order block. This wick is still unmitigated, so it is a valid order block. So the real target on this trade should be what? Should have been here. But then I've closed this trade. I took partial profit also, and I've actually closed this trade entirely. In fact, I closed last week. As some of making this video, I've already closed this trade already. You can see from here. And then look at what happened here. This what was a higher time frame key level of what? Order block, right? And then what happened when price gave here? It sold. And then it came in contact with another what? Higher time frame key level of what? Order block, which is this unmitigated wick here. And then we'll see what happened here also. What happened here? Key level of what? Order block. It hasn't mitigated. I don't even know why I marked it out also. It hasn't mitigated. And then when price came, you had what? We have a buy off. Price bought to the upside. Even broke these internal structures. You see the power of marking out your higher time frame key levels. And then right now, what happens? We have another key level of what? Order block. When price, if this candle closes above, okay, from this point to this point is one candle. So it means that from here is the fair value gap, and this candle right here becomes the what? The order block. That is very clear. So you can see how price is, moving from a point to another and all of that. So you mark out your higher time frame key levels of what? Order block. Like for instance, this is another key level of order block. It was very huge. This one is one candle, and this is another candle. So this, like I told you guys in the beginning of this video, that these internal candles, they don't contribute. They're irrelevant to the what? Price movement. They do not contribute anything to the price. So this was the order block. This candle from here to here is the order block. Now I'm not talking about placing stop loss, confirming target. In another video, I'm going to talk about how to confirm this key level, place your stop loss. Of course, there's no way you're going to place stop loss this low. It's not possible. You're going to place your stop loss at the confirm swing low. We have confirmed this what reaction right here. So in another video, we're going to talk about swing, what makes a structure valid, and then what to confirm, what do we see. Then we'll now see that this will have what? A break of structure or a change of character. What makes a break of structure? What makes a change of character? And then we'll now talk about how to confirm key levels using higher time frame liquidity sweep. So I wish you guys all the best. This is another key level of what? Order block I just saw right. So this every week or every weekend, when market closes, go to the daily time frame, mark out your key levels, and then wait for price to do what to react from there. So and this will be all for now, guys. I wish you guys all the best, and this will be all for now. Love you guys. If you have not subscribed to the channel, please endeavor to subscribe, and if you got value from this video, please like the video, share the video, so that you can as well, so that YouTube can as well, show the video to people that will be interested to learn the same thing you are learning. Because when you share and like the video, it will help the algorithm to do what, to push the video to people that need to hear and listen and learn this concept. So I wish you guys all the best, and this will be all for now. Bye for now. Have a wonderful trading opportunity out there, and bye for now, guys.